Hello, friends. September 2026 could be one of the most important months you'll face as a UK pensioner in years. 3 major deadlines are landing at the same time, and if you miss even one, it could cost you real money. Stay with me, because I'm going to break down exactly what's happening and what you need to do. Welcome back to Pension and Benefits Guide, the channel where we cut through confusing DWP rules and just tell you plainly what you need to know. If you find this useful, do stick around till the end. Quick mention before we start. If the pension system has ever felt designed to confuse you, I've put together the British Pensioners' Money Playbook, covering every rule and form using the 2026-27 figures, written in plain English. Links in the description. Let's get into it. First, the winter fuel payment. The qualifying week for 2026-27 runs from the 21st to the 27th of September. To get this payment automatically, worth £200 for most pensioners and £300 for those born before September 1946, you need to actually be receiving pension credit during that exact week, not just have applied for it. Here's the concerning part. Around 880,000 pensioners are entitled to pension credit but aren't claiming it. Since pension credit takes 6 to 8 weeks to process, the safe window to apply has already passed. If you haven't claimed and think you're entitled, call the pension credit line today. There's still a small chance of an expedited claim. And even without the winter fuel payment, ongoing pension credit still carries real value. There's also a deadline running the other way. If your income is above £35,000, HMRC will claw the payment back through your tax code, about £17 a month. If you'd rather opt out entirely, the deadline is 11:59 p.m. on the 20th of September, 2026. Now, here's the part catching people off guard, a tax trap, and the letters are already arriving. The triple lock pushed the state pension up 4.8% from April 2026, taking the full new state pension to £241.30 a week, or £12,547.60 a year. But the personal allowance is frozen at £12,570 until 2031, leaving a gap of just £22.40. Any extra income at all, savings interest, part-time work, a small private pension, can now trigger an automatic tax bill through HMRC's adjusted tax code system. That's why many pensioners are seeing their private pension payments quietly shrink. It's not an error, it's the frozen allowance meeting a rising pension. HMRC sent over 1.3 million simple assessment letters last year, and this autumn's number is expected to be higher. If a letter arrives, open it immediately. It's a real tax demand with a real deadline. And if you have savings sitting in an ordinary account, consider moving them into a cash ISA, since ISA interest is completely tax-free and doesn't count toward your personal allowance. Quick pause here. If this is useful, do hit like, subscribe, and drop a comment telling me which deadline affects you most. It genuinely helps the channel, and sharing this with another pensioner could make a real difference for them. Now, here's where the real long-term impact comes in. September is when the data behind the April 2027 triple lock gets finalized, based on whichever is highest, September CPI, average wage growth for May to July, or 2.5%. Early wage growth data suggests around 4.2%, while CPI is forecast between 3.4% and 3.7%. If 4.2% holds, that adds £10.13 a week, £527 a year, to the full state pension, or around £853 a year on the average actual pension. The Chancellor confirms the exact figure at the autumn statement on October 28, 2026. Next, care costs. The previous government's proposed £86,000 lifetime care cap is still under review by the current Labour government, and September 2026 is expected to bring more clarity on whether it goes ahead, gets delayed, or gets replaced. For now, don't plan around that cap arriving. Under current rules, if your total assets, including your home, exceed £23,250, you're expected to fund your own care, and residential care averages £1,200 to £1,500 a week. If care planning matters to you or your family, get advice based on today's rules, not on a cap that hasn't been confirmed. Finally, a simple practical point. Unlike August, September has no bank holidays, so every DWP payment lands exactly on its scheduled date, based on the last 2 digits of your national insurance number. 00 to 19 is Monday, 20 to 39 Tuesday, 40 to 59 Wednesday, 60 to 79 Thursday, and 80 to 99 Friday. So, to sum it all up, the winter fuel qualifying week is the 21st to 27th of September, the opt-out deadline for higher earners is the 20th, the personal allowance freeze is quietly creating tax bills for hundreds of thousands, September's CPI data will help shape your 2027 pension rise, the social care cap remains unconfirmed, and your DWP payments will run exactly on schedule this month. So tell me in the comments, which of these deadlines affects you the most? I read every single one. If this helped, please like, subscribe, and share it with a pensioner who needs to see it. And if you want to understand exactly how pension credit works, I've got a video on that coming up next. Thanks for watching, and I'll see you in the next one.